You know, for so many of us investors, finding that one small cap stock with the potential for massive returns, well, it's kind of like the Holy Grail, right? It's a hunt for that hidden gem. Today, we're plugging into one such company to see if it really has the power to supercharge your portfolio.
So, let's get right into it. Could a company that literally builds and services electrical transformers, could that really be the next high-growth opportunity you've been looking for? Let's dive in and see what's going on.
Okay, so the company we're talking about today is Supreme Power Equipment. Now, this is a pretty new name for most public investors since their IPO was just back in December of 2023, and they operate in a sector that is absolutely critical to the economy. So what do they actually do? Well, Supreme Power is in the business of making, upgrading, and even refurbishing a whole range of transformers. And check out their client list. We're talking about some real heavyweights here. Siemens, L&T, Suzlon. They are plugged right into the power, solar, and wind sectors, and they're also a major supplier to the Tamil Nadu Electricity Board. All right, let's kick things off with the exciting part, the bull case. What's the engine that could potentially drive some serious growth for this company?
The whole growth story really starts with this number, 168 crore rupees. That's their current confirmed order book. Now, to put that into perspective for you, that is already more than their entire projected sales for the 2025 fiscal year. That is some powerful revenue visibility right there.
And it gets even better. Beyond those confirmed orders, the company has a pipeline of potential new deals that's worth a staggering 800 crore rupees. Now, management is being conservative here. They're only expecting to convert about 10 to 15% of that. But even at that rate, we're talking about a massive injection of new business.
So you might be wondering, how on earth are they going to handle all this potential work? Well, with a huge, and I mean huge, capacity expansion. The plan is to more than triple their production capacity, from 2,500 all the way up to 9,000 MVA by January 2026. MVA, or megavolt ampere, is the key metric here, so this is just a quantum leap in their manufacturing power.
And what does that expansion mean in terms of cold, hard cash? A potential of 500 crore rupees in annual revenue once that new capacity is up and humming. That is a massive jump, and it gives investors a really clear roadmap for how this company could become a much bigger player.
Okay, but look, every investment story has two sides, right? So now we have to pump the brakes a little and look at the bear case. Think of these as the flashing red lights that any potential investor absolutely needs to pay attention to.
First up, and this is a big one, institutional ownership. The stake held by the so-called smart money, mutual funds, foreign firms, has just fallen off a cliff. It plunged from over 20% right after the IPO in December 2023 to less than 3% just a few months later. Now, this could just be the pros taking some quick profits, or it could signal a real lack of conviction in the long-term story.
There are also some signs of stress in their day-to-day operations. Their working capital days have stretched out from 96 to 144. In simple terms, this means their cash is getting tied up in the business for a lot longer. That can put a real strain on liquidity and make it tougher to fund both their current operations and all that future growth.
And all of this really points to one crucial thing, execution risk. It's that gap between having a fantastic order book and actually turning that into revenue. A big pipeline is great, but there is absolutely no guarantee that all those orders will convert smoothly, or even on time.
So, we've heard the bull case and we've heard the bear case. Now, let's ground all this in some hard data with a quick financial reality check. The numbers here actually paint a picture of pretty steady growth. You can see sales are climbing consistently, from 100 crore in 23 to a projected 149 crore in 25. And, just as importantly, their net profit margin has held stable and even ticked up a bit. That shows they've managed to handle this growth profitably, at least so far.
And here's that ownership dynamic we were talking about, all in one picture. You've got a really strong promoter holding at 57%. That's a good sign of confidence from the founders. But then you see that tiny little 2.9% sliver. That's the institutional money. That leaves a pretty significant 40% chunk in the hands of the public.
Okay, so we've seen the growth engine, we've seen the red flags, and we've crunched the numbers. Let's try to bring it all together for the final verdict and really weigh the potential reward against those very real risks.
How you see this stock really depends on your time horizon. In this short term, let's say the next year or so, you should probably expect a lot of volatility because of the issues we just discussed. But long term, say 3 to 5 years out, if they can execute flawlessly, this stock has true multi-bagger potential. meaning it could easily double or even triple from here.
So it all comes down to what kind of investor you are. The source suggests a pretty conservative approach. Wait for proof. Wait and see how that new plant is actually performing, maybe in late 2026. A more aggressive investor, on the other hand, might see all this volatility as a chance to gradually build a position on any dips with an eye on the long term.
You know, to boil this all down to just one sentence, this quote from our source material really says it best. A high-risk, high-reward SME play, worth holding for long-term wealth creation if you can tolerate volatility. That just perfectly captures the trade-off here.
And that leaves us with one final big question. Supreme Power definitely has a high-voltage growth engine, but there are also some very real risks of a short circuit along the way. So is that potential reward worth weathering the inevitable volatility? Well, that's the decision every investor has to make for themselves.